Well, basically, I think that the global economy does not support the current valuations. Corporates have had record profits, largely because they're buying back their own shares, and so the number of shares is diminishing, whereas revenue growth is basically flat. And it's very interesting, as you just said, that the Fed wants to pull back on its quantitative easing, which they have announced a long time ago, by the way, because the economy is strengthening. Well, the bonds market doesn't seem to suggest that this is the case. The 10-year Treasury note yield is at 2.54%. In fact, Treasury notes and Treasury bonds rallied today.
Okay.
So it suggests to me that the bond market, that is the more sophisticated market than the stock market, is not believing in a very strong economic recovery. And by the way,
fine,
I don't believe it either.
Is it telling you, though, that we're about to have a 30% correction, though? Because that is your call. You're saying 2014 is going to be as bad or worse a year as 1987.
Yes. I want to tell you something. Last night I was taking a nap, and then I woke up, and it was 5 minutes before halftime, Brazil-Germany. Then I saw the result 5-0 in halftime. I thought it's a misprint. The game ended 7-1. 7-1. This has hardly ever happened at the World Cup. And I can tell you, many things will happen in terms of volatility. The public, the institutional investors, everybody thinks the same way. The Fed is there. There was a Greenspan put, Bernanke put, Yellen put. The Fed prints money. Everything will go up. That isn't the case.
Mark, do you worry that you lack credibility at this point? Let's face it, with all due respect, you've been saying the same thing for a few years now. You've been calling for a big correction in the market. You were calling for it in 2011 when the S&P was around 1,072. We've gone up 900 points in that time. You know, and people ridicule you saying, look, a stopwatch will be right eventually. So what do you say to your critics who are saying, oh, there goes Marc Faber just saying the same old right now?
Well, actually, I have to correct you. In 2011, after the correction had happened, that was the last correction of more than 20%, when the S&P dropped to 1,074, I said there's a market rebound coming. I didn't tell anyone to short stocks at that time, but it is correct that since 2012, I said it would be healthy for the market to have a meaningful correction, but it could be that we are in a year like 87 when we go straight up, and then we don't have a correction, but a more significant crash.